Hello traders and welcome back. Gold is pushing higher this morning, sitting at 4,670 with the dollar flipping lower after a 3-day advance. The chart is showing something specific. A double bottom at 4,500, let's call it, which is the 50 Fibonacci retracement. Very important psychological support for sentiment. And after breaking the 50 moving average, prices are now attempting to break the 200 MA, which, by the way, is the neckline of this potential double bottom. Break above it, and the measured move projection brings us all the way up to 4,810. Quick context on why gold is up. Of course, the dollar fell on Wednesday as optimism that Washington is closing in on a deal with Iran reduced their currency's safe haven appeal. The US reaffirmed the ceasefire is intact. Rubio confirmed offensive operations have concluded, and Trump announced a temporary pause to Project Freedom, which was what actually caused market havoc on Monday. The US led effort to assist stranded vessels exiting the Strait of Hormuz. So with a blockade now in full effect still, though, however. Now, markets are waiting for the ADP private payrolls report today ahead of the NFP that is due on Friday. Now, on the chart, as I said, we are looking at a potential cross, golden cross of the 50 to of the 200 from the 50 MA. We are on the 4-hour chart, however. There was a first attempt up at 4,780 back in 22nd of April, which failed. And after that, we had a death cross, let's say, but that brought us to a double bottom here. And we have probably, like at least temporarily, put a bottom in. This is the flip point. So it's not just a Fibonacci, it's not just a psychological support. It's the level where structure changes, and we're now actually bounced from it twice, 1 and 2. This resulted, for example, from a correction after that move to the upside. So we are currently correcting. Okay. The question is, have we stopped correcting or not? Well, the neckline of that bottom is now the 200 moving average, which is exactly where prices is fighting right now. If we break and close above it, as I said before, we can use the measured move, or we can use simply a Fibonacci extension tool and look at the 100 and potentially further levels, of course, 4,820. Then you look at, the 4,922, which is the previous peak as well, just a few dollars below the 5K handle, which is, of course, the magnet zone. So now we are sitting, of course, just below the 23.6, which is a 4,700, which I think might be important resistance, given we have actually stopped at that level once and bounced and then fallen below it. But this territory is important. Okay, it could actually show us where we could eventually go in the short term. The RSI now on the 4-hour chart is sitting at around the 62.60 or so, clearly above the 50 line, clearly after a bullish divergence, okay, because you see that we have a trough here lower than this one, and it's not yet overbought, which means there is more room to run if the breakout confirms. But given, of course, how much space we have to go up, how much room, we could see essentially a rejection initially at 4,700. Now the nuance. This, of course, isn't a clean bullish setup just yet. The 200 MA rejected price twice already, one here, and we are seeing that here as well. Actually, more than that. But let's just focus in the short term. It's currently rejecting the price. So another failure here, which would mean a retest of the 38, then the 50, And if that breaks, we're looking at going at the golden pocket of 4,400. That's, of course, the level that we failed to reach with that double bottom, right? So that level matters today and into the rest of the week. Um, do we close above the 200? Or are we just going to trade above it intraday? So the one scenario, of course, is bullish. We need to see a daily close above the 2000, what was it, the 200 May, pretty much. And then move toward the 4,700. And then we're looking at the 4,800, which actually brings the daily 50 MA in play. And above that, you have, of course, the previous peak and then the 5K. Now, if we see, because you never know, a double top over here, with that being a force break, and the 200 MA rejects price, then of course this is the bearish scenario, and we're probably going to lose 4,590, then move towards the 4,500 once again. If we break with conviction this level, then we're looking at the golden pocket. If we face another like retest, then that might just be a triple bottom and we might shoot higher once again, and the same scenarios would apply. We'll have to wait to see what's going to happen around the 200 MA. The dollar is the macro driver, let's not forget. So as long as the dollar keeps the bid off after this 3-day advance reversal, gold has support. If Iran talks stall or the Hormuz situation flares up again, the dollar bid returns, and so does the pressure on gold. We have the ADP today and the NFP on Friday, which is actually probably what is going to determine whether any of that price action around the 200 MA is going to play out towards the upside or towards the downside. So the 200 MA is the trigger for now. 4,500 is the floor. Watch the daily close, not the week, and see you in the next video.